Today in the show, we have Coinbase and Ledger Live buying crypto directly to your hardware wallet. Citi Pilots a tokenized private fund. Mondele joins Hedera Council, and so much more. I'm your host, Mauricio Magaldi, and this is BlockDrops, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption, and are meant for educational purposes only. In the first drop today, we're going to cover Coinbase Pay's new functionality, which, partnering with Ledger Live, allows you to buy crypto through Coinbase Pay's function and then move it directly to your self-custodial hardware wallet through Ledger Live. If you've been in a crypto for however long, you know that buying a crypto and moving it around is somewhat of a clumsy process. So it's interesting to see Coinbase, which is arguably the largest name in crypto for retail right now. It is one of the largest, if not the largest, centralized exchange. It's probably the only listed centralized exchange in the stock exchange in the US, and it's operating in regulated fashion across every jurisdiction that they play on. So it's interesting to see that they are investing a lot in the UX, be it in the multiple tiers of the Coinbase exchange, be it on their self-custodial wallet, be it with Base, the layer 2 blockchain. So there's a lot of investment in making lives easier in crypto by Coinbase. And by partnering with Ledger, one of the most popular hardware wallets companies in the market, they're now bringing all these things together, right? So if you're buying crypto regularly, you have to have a account at an exchange. You buy the crypto using fiat, then you move the crypto from the exchange to your software wallet, and then you connect your hardware wallet to the application of your software wallet, and then you move your assets into the hardware, or the keys to your assets into the hardware wallet. Now with Coinbase Pay and Ledger, it seems that it's just with the click of a button, you decide what to buy, you decide where you're going to store, and then the integration resolves itself on your behalf. Now, you can argue that this is somewhat centralized. Hey, Mauricio, this is two centralized players kind of helping out and removing the friction. I would say you're right, but the fact that you have two centralized players that are enabling self-custody and therefore self-sovereignty, this is a big step in terms of ensuring the UX. So according to the announcement, this is aimed at being convenient, being fast, secure, and it doesn't incur any additional fees other than the ones that you would pay anyway to operate with both of these two applications. So the step-by-step, according to the announcement, is that you open the Ledger Live app, you tap the transfer button, then tap buy. You'll compare the sources of prices, select whatever crypto asset you want, buy, enter the amount, select the country you're operating. Then you select the fiat payment method. It works with ACH in the US, Visa, Mastercard, or Maestro. And pay with that, select Coinbase as the provider, and that moves the asset directly into your Ledger wallet. Now, if you've been listening to the podcast for a while, you know I'm a sucker for UX, and I feel that every project that is consistently working and improving the UX in crypto deserves a space. And I think the combination of these two companies and what they're doing is interesting to see. What I'm more interested to see is the uptake. How many people are either starting to use Ledger because of this, or even users of Ledger that might want to start using Coinbase? Because don't get me wrong, this is all fun and games, but these two folks are looking into growing their customer base. And by partnering, they can definitely reduce the cost of customer acquisition, because these two demographics are not exactly the same. If you're a centralized exchange, you have a particular customer behavior. If you're a Ledger user, you have a completely different customer behavior. Joining these two journeys seem to be something that is beneficial for both, and I love that this is happening as we kind of start to shape up into what promises to be an actual bull run. So again, none of this is financial advice. None of this is an advertisement. Do your own research. But the fact that there are major players in this industry actually doubling down into the UX is certainly something for us to celebrate. In the second drop today, we're going to talk about the announcement by Citibank, who's using Avalanche's blockchain, a subnet called Spruce, to actually pilot what promises to be one of those kind of untapped territories for asset tokenization, at least for now. So the goal is to use Avalanche or its subnet to tokenize private equity funds. Private equity funds or any private asset is probably orders of magnitude larger than public traded assets, stock exchanges and bonds, etc. So stocks, bonds, and other types of public assets amass around, I think it's $100 trillion US dollars total globally. This industry of private assets, it's orders of magnitude bigger than public assets. The reason why it's not tradable is because it's not liquid enough, or there aren't enough venues or structures in the market to enable those assets to hit the market and be more tradable, which, you guessed it, tokenization might be that kind of oil that, kind of allows the gears to run without grinding. So this is going to remove a lot of friction and will potentially create a lot of liquidity for otherwise somewhat illiquid asset. For this pilot, Citi partnered with WisdomTree and Wellington Management, which are large players in the private equity space, and they held this as a proof of concept, a pilot. So it's not production grade yet. They're trying to issue, using Avalanche Spruce, the fractions of these funds in ways that are compliant with the execution of the large financial institutions. So Citi's joining this subnet, and other companies are also joining this subnet, which is dedicated to financial services. T. Rowe Price, WisdomTree, Wellington Management, and Cumberland last year joined and started doing other pilots like trade execution and even settlement. And they're exploring this in the angle of efficiencies. But when it comes to private equity or private assets in general, this is so much bigger than just efficiency. This could mean actual trading revenue for all of these participants, because then you have more liquidity and you have more access to tokenize those funds. According to Morgan Kropetsky, Senior Director of Business Development, Institutions and Capital Markets for Avalanche Labs, he says, and I quote, "The growing use of Avalanche by leading financial services firms like Citi, Wellington, WisdomTree, and DTCC Digital Assets continues to cement Avalanche as an institutional blockchain leader," end quote. Nisha Surendran, the emerging solutions lead for Citi Digital Assets, had to say, and I quote, "We believe that by testing the tokenization of private assets, we are exploring the feasibility to open up new operating models and create efficiencies for the broader market," end quote. Now, this is interesting because for this to be market-wide, it's not just about the technology, it's also about the standards, data standards, process standards, and regulations that will enable that to happen. But it's obviously interesting that larger players like WisdomTree and Wellington, by participating, they can start pushing a little bit more of that agenda with legislators and regulators saying, hey, listen, it really works. It makes us more efficient. It creates new revenue and creates more access to an industry that is otherwise untapped by the large portion of investors. This could actually help, and I hate this word, but it's actually help democratize the digital assets. And if it's secure, and if it's decentralized, and if it's somewhat regulated, there's a big chance for this to actually push forward the adoption of blockchain. So this test is an end-to-end token transfer, secondary trading, and validating the capabilities throughout the whole process for collateralized lending of such assets. So pretty interesting to see. I would hope more banks would take part on such a pilot, and let's see if that's a next stage for this effort by Citi. The third drop today is about a blockchain that we don't talk a lot about on the show, but it's shown here and there with some specific use cases. It's Hedera or Hedera. It's a blockchain, a layer one, that is mostly focused on enabling digital transformation for a supply chain. And interesting to see, not exactly the technology in this particular case, but Mondele International, one of the largest global food and beverage companies with worldwide presence. You probably eat their stuff on your cheat meals, I know. Toblerone, Oreo, any other packaged carb, sugary carb you probably consume is produced by Mondele, and they have global presence and they have global supply chains. And obviously, as we've discussed, endless times in the show, blockchains are primed to enable traceability, provenance, and Hedera has solutions that are being deployed across that particular function across industries. But the angle of this news is that Mondele joined the Hedera Council, which is the organization that helps govern Hedera, the blockchain. And the reason why I wanted to highlight this piece of news this week is that one way for enterprises to start settling how to operate with public blockchains is to participate in the governance process. Now, you can argue that because Hedera has a council, it also has other voting mechanisms for the community. It's kind of halfway between being completely centralized, meaning it's owned by someone or by some entity or a consortium, and fully decentralized, where everyone gets to vote, post new evolutions on the roadmap or new parameters to be used by the chain, and everybody votes and that gets adopted, versus being pretty much controlled by a single entity or a consortium of entities. The council exists in between, is a combination of entities that participate on Hedera, but they also have other voting mechanisms for the rest of the community. So that's kind of a blended way to govern. And Mondele joining means that they have a say in what happens with the infrastructure. Because if you're an enterprise and you're regulated and you're operating on regulated jurisdictions, it is a hard sell as that enterprise that you're going to adopt a piece of infrastructure that you want to be critical to your operation, mission critical, and you have no say in what happens with that infrastructure. Right? It's a hard sell for your CEO, your C-suite. Is a hard sell from the C-suite to the board, and is a hard sell from the board to regulators and to other stakeholders. So participating in the governance is one model that enterprises can actually adopt to start influencing, not controlling, influencing what happens with their infrastructure of choice. Granted, it's not for free. You have to assign at least one or some executive time to participate. You have to have business and technical people that are engaged into the ecosystem to bring the information and take the information. And you have the ability to actually benefit from the innovation and also take innovation that you might want to fork on that chain from what you've learned by using the infrastructure. So it requires some effort, but it's a much more friendly way for enterprises to start actively participating in blockchains in ways that a couple of years ago we couldn't foresee. So kudos to Hedera, kudos to Mondele, and I hope that this model starts to permeate around other chains, because it's pretty interesting to see Actually, not just their joining, but how the technology governed by those enterprises is going to evolve. Will it be more generic for more use cases, therefore more activity, or will it be increasingly more industry specific, or somewhere in between? In a week packed full of news, here is more. Mastercard launched an NFT trivia game for UEFA. Cambridge allows you to browse their dashboard about the digital money innovation. The Empire State Building launched a loyalty program using Avalanche's NFTs. Telefónica and Chainlink now partner to secure smart contracts in the open gateway infrastructure. Messari released the State of Cardano covering the fourth quarter of 2023. Guardian Labs announced the launch of PYUSD.to to simplify off-ramping any tokens into PayPal and Venmo wallets. BitGo, the custodian, will now offer custody for Ondo Finance generated assets. Yuga Labs, the owners of the Bored Apes and CryptoPunks, announced they are acquiring Proof, the makers of Moonbirds. It sounds like the NFT land, for the blue chips at least, is getting a lot centralized. Revolut, the UK fintech, is introducing a new crypto exchange that targets advanced traders. Taurus, the Swiss crypto infrastructure company, now partners with Lido to bring liquid Ethereum staking to Swiss banks. The Hyperledger Foundation announced the launch of Web3J, which will enable Java integration for Ethereum smart contracts. And Chordinals are launching on Bitcoin. Yes, you have MIDI piano inscriptions on Bitcoin in the Ordinals standards that can create music using Ordinals recursion. Catch us online. We're on Instagram at BlockDrops Podcast, on Twitter at BlockDrops Pod or 0x Mauricio. We're on Lens at blockdrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the BlockDrops Podcast at Spotify, iColab, Faberbun Tech, and all of the other major streaming platforms. Yay! Shoutouts today to the people who shared the links you will find in the episode notes: Pat Berisha, Rita Martins, Keith Bear, Leo Fernandez, David Cunningham, Jack Vangros, Eduardo Viegas, Ben Halen, Amanda Schwartz Ramirez, José Fernandes da Ponte, Katie Wheeler, Thiago Amaral, Simon Taylor, Anthony Day, Claudia Mancini, and Luigi Tillier. If you noticed our new logo, that's because we had Lucas Bittencourt designing it for us. Thank you so much, Lucas, for putting in the effort and appreciate your support. Guys, don't forget to leave your ratings on your favorite player. This is all for today. Stay rare, stay weird. LFG.